So tell me, what do you get when the dollar gets stuck? The pound starts flirting with that 1.33 level. Gold is hovering just below record territory, and the FTSE 100 tries to, well, shake off a 4-day losing streak. I'll tell you, you get a Friday session where everyone's pretending to be calm while secretly watching one thing: the US PCE report being released later today. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, everyone. I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where each morning I break down the biggest market movers across currencies, commodities, and indices, mixing fundamentals, technicals, and, well, just enough logic to make sense of it all. Let's kick things off today with currencies, where the dollar index is sitting around 99, on track for a second straight weekly decline as markets continue to price in Fed easing. Currently sitting around an 87% chance of a 25 basis point rate cut next week. 2 to 3 more cuts are also expected next year, and prospects that Kevin Hassett could replace Jerome Powell in May reinforces the idea of more aggressive easing. On the data side, initial jobless claims fell to a more than 3-year low, though the move is distorted by the Thanksgiving period. The Challenger job report shows 71,321 layoffs in November, the highest for that month since 2022, hinting at underlying labor market stress. Markets, as stated, are now waiting for the delayed PCE inflation, plus consumer spending and income numbers to gauge how justified that rate cut bet really is. On the UK side, the services PMI has revived up to 51.3 from the 50.5 level, clearly above the 50 expectation line. The composite PMI rose to 51.2 from 51.5 as well. Behind the headline, business activity showed and employment fell at the fastest pace since February, even as prices charged inflation eased to its lowest since January 2021. Current policy expectations are as follows. The Bank of England is widely expected to deliver a 25 basis point rate cut in December and then pause to avoid reigniting inflation. At the same time, the US markets are fully pricing in a third Fed cut in December, with more easing into 2026, giving the pound a relative advantage here. Put simply, both sides are moving towards easing, but the pound currently has that narrative edge. Looking at the chart, GBP USD is roughly stable around 1.333 after stalling just below that 1.336 level. The pair failed to cleanly break above this level, trimming some of its recent gains. Still, the pound has strengthened 1.44% over the past month and is up 4.6% over the last 12 months. The technical structure from recent trading, well, a breakthrough of that 1.332 zone is seen as a key bullish trigger. As long as oscillators stay positive, a push above 1.336 could open the door towards that 4.6 level and then the 1.365 zone. On the downside, 1.332 is the immediate support. Below that, the 1.325 and 1.315 becomes important areas. A decisive break there could negate the bullish outlook and tilt the bias back towards the downside. For now, however, with dovish Fed expectations and a still resilient pound, the path of least resistance remains tilted to the upside, even if the bulls run a bit of a pause to catch their breath at the current level. Moving over to commodities, gold is doing, well, what it often does before a big macro print. Wait. Prices are hovering around $4,200 per ounce, effectively flat. Over the past month, gold is up 5.82%, and on a 12-month basis, it's up a massive 59.82%. It remains not far from its all-time high of $4,381.58 set in October. The drivers right now, well, markets are fixated on this delayed September PCE report, the Fed's preferred inflation gauge, which is due later today. That release, combined with consumer spending and income data, will help shape expectations about how fast and how far the Fed might ease. On the labor side and policy side, ADP private payrolls showed a surprise 32,000 decline. Challenger reported 71,000 layoffs in November, bringing, well, the year-to-date total close to 1.17 million. These data points reinforce the view that the labor market is cooling, plus that possibility of leadership change within the Fed, and especially with a new Fed chair that could be more dovish, which reinforces that aggressive easing stance. At the same time, higher US yields and pockets of stronger jobs data, like the lower initial jobless claims earlier this week, can cap upside in the short term. On the geopolitical front, UK peace talks remain uncertain, and elevated geopolitical risk continues to underpin gold's safe haven appeal. So right now, gold is caught between short-term yield and data noise. And, well, the bigger picture story of easing expectations and persistent uncertainty. Looking at the charts, this commodity is currently flatlining near 4,215, consolidating after a strong move over the past year. Not far from record highs around that 4,381 level. Recent behavior, however, well, the metal has edged slightly lower on the week, putting it on track for a modest weekly loss. But the medium-term trend remains clearly higher, giving that strong monthly and yearly gains. The key point here, well, price is coiling near that upper end of the range, and the next big move will likely depend on how PCE prints relative to expectations, where a hotter number could weigh on gold in the short term, while a softer one could reinforce the easing narrative, supporting the metal in the bigger picture. Finishing things off today with equities. The FTSE 100 finally broke a 4-day losing streak, closing about 0.2% higher at 9,711 during yesterday's session. The backdrop, while investors are increasingly confident that the Fed will cut rate next week, and US labor data and then the PCE approach. That global easing narrative has been supportive for risk assets more broadly, including UK equities. If we have a look at specific sector moves, while personal goods were among the top performers, we saw Burberry gain about 3%, JD Sports Fashion rose 2.7%, then we saw Rolls-Royce and BAE Systems each climb 2.6%, extending the aerospace and defense rally into a third straight day as negotiations around the UK peace deal continues. On the downside, Diego fell 3.9% after a UBS downgrade to neutral and a price target cut. Utilities were also under pressure, led by SSE, which dropped 1.7% as it traded ex-dividend. Medium-term performance, while the FTSE 100 is sitting at that 9,725 level currently, down 0.68% over the past month, but still 16.31% higher than a year ago and not far from its all-time high of 9,930 reached in November. So we've got an index that's shaking off short-term losing streaks, supported by defense and consumer names, and still trading within sight of record territory. Looking at the charts, 1,725 marks a modest bounce from the recent pullback. The long-term trend remains up, with the index still within shouting distance of the all-time high. The next barrier to overcome here, however, is that 9,735 level, which also aligns with the 61.8% FIB level. And then we have the 9,800 resistance zone. The recent month-on-month dip looks more like a pause within a longer trend or uptrend rather than a structural reversal at this stage. For now, the FTSE 100 is tracking global risk sentiment and Fed expectations closely. And today, that means a cautious grind higher rather than a breakout or breakdown. So traders, heading into the weekend and early next week, markets have a simple but critical checklist. PCE inflation today. Does it confirm the cooling but not collapsing narrative? And then number two, the Fed decision next week. Do we get the widely expected 25 basis point cut? And what does the guidance say about 2026? Well, in our next session, we'll unpack how the PCE release and market reaction resets the playing field going into that all-important Fed meeting. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to atfx.com and we'll go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.